It's really a kind of a new phase.
China have demonstrated to the rest of the world, welcome to invest in China, but you have to invest in the right area.
Two possible directions. One is higher technology, and the second is some of these critical complementary companies for China's supply chains.
Biopharmaceutical investment could be a very long-term and attractive for foreign companies.
Beijing has unveiled a new action plan to stabilize and upgrade foreign investment. Is this just another policy update, or does it signal a deeper shift in China's approach to opening up? Welcome to the Chat Lounge. I'm Chueng. Joining me on this topic, Dr. Yao Shujie, Chongqing Professor of Economics, Chongqing University of China, and Dr. Zhou Mi, Deputy Director, Institute of American and Oceania Studies, Chinese Academy of International Trade and Economic Cooperation. It's a great pleasure to have you back on the show, gentlemen. So China actually rolls out foreign investment policies almost every year. What makes this latest action plan different? Zhou Mi, the Ministry of Commerce, your institute's parent agency, is one of the three authorities that jointly introduced this plan. Shall we begin with you?
Yes, I think that it is true that when China is trying to discuss the management of not only about the trade, but also about the capital flow, it's really a kind of a new phase in my understanding. We were saying that China is already the number one trading country in the world. We have the largest trade volume, but when we're talking about Chinese enterprises, maybe many of the world is just looking at China as one fact that China's enterprises may be very competitive in the price control in some of the supply in different ways, but are they aware that Chinese companies are really not just staying here in China, they are also spreading in other countries. They have been doing that for almost 20 years. I think that is a really new time for us to discuss about the background when the government are required to do more to take care of this kind of new issues. I think that it's necessary for us to discuss about the possibilities of what is right and what is not so good for the policies. So in this regard, I would say that these new practices is trying to improve the China's policies into a higher levels. In the past, the outward investment by the Chinese enterprises are managed by two separate ministries. That is MOFCOM and another is NDRC, the National Development Committees and Reform. So I think that both of these ministries are having their own policies and regulations for so many years. So, I started to work in that area of outward investment. So it started for 21 years ago. So during that time, I still remember that many of our practices is trying to reduce the restrictions by the governments on the enterprises practices, because enterprises are arguing that they are forced to put some of these clauses in their possible contracts with foreign trade partners by investment. The clause is that these kind of contracts only be effective when the administrations permit that. So we are giving the authorization to the enterprises and trying to reduce the interference with the practices of the enterprises. But I think many years later, the situation has changed a lot. Some of the enterprises are already have the abilities and the willingness to doing investment abroad. So it's not only about what we should do to facilitate this process, but also some of the new areas, some of the new concerns. And one of the main concerns is about the national security. So I would say that in such kind of a new update, there are so many new considerations about us, and what we have to do some better things to coordinate it about the different stakeholders and trying to make this process as smoothly as we can.
Some are saying that this time the focus has been shifted for foreign firms from gaining access to operating successfully in the Chinese market. Shujie, your take here?
Yeah, I think the Chinese reform on foreign direct investment into the country, as Zhou Mi just pointed out, we do it on a stepwise approach. Initially, we just have the so-called market access, allowing foreign multinational company to come to China as an initial stage. But over time, this stage is not enough because the Chinese economy, domestic economy, is expanding and the quality, the sophistication have been improving all the time. And what China need today is very different from China need 10 years ago. And China needed 10 years ago is very different from 20 years ago, of course. So over time, the Chinese requirement for foreign direct investment have been improving all the time. And today, because the Chinese domestic economy is transforming from the low, medium level to a higher and medium level currently, so foreign direct investment have to serve this purpose of Chinese transformation, especially in the cutting edge technology, manufacturing, and nowadays more and more focus on high quality services. High quality services nowadays, including pharmaceutical, hospital, biotechnology, and other things. And AI, of course, some other country, they have their own policy of profiting investment of the high-tech sector into the Chinese domestic market. But China certainly want to open the door for two basic purposes. One is to complement what is short by the Chinese domestic investors in some particular area. And secondly, it would to increase the so-called market competition. So the domestic firms have to face more and more challenges from international firms so that technological frontier could be put outward. So yes, you pointed the issue, which is rightly reflecting this. I mean, from the opening access to directed investment in certain sector and also certain area, and also certain types of investment. For example, initially we only have this concept of investment partnership, the so-called joint ventures. And nowadays we actually encourage foreign firms to establish their own operation, and including even headquarters, and even provided financial services with domestic banks and other institutions to facilitate foreign firms into the domestic soil. And regulation is relaxed to the point that foreign investor firms would have the equal treatment of the domestic firm, which is very important to me.
Then, if you can, maybe in one or two sentences, what would you say is the most important signal this action plan sends to or intends to send to global investors, Shujie?
Well, I mean, obviously, China have demonstrated to the rest of the world, welcome to invest in China, but you have to invest in the right area.
All right. Zhou Mi, your take here?
Well, I would say, in my understanding, that China is a really important country for the possible future. I think that from this kind of practices, I think that we want to send the world that China is willingly to hear from some of the complaints, even from the foreign investors, and we want to share our opportunities with them. I think that the message is that we are able to give you more opportunities, and if you are coming here, we welcome you to take part in our opportunities, and we can trying to deal with uncertainties and benefit from the abilities to have a more sustainable development.
Right. China actually still hosts more than 530,000 foreign invested enterprises and nearly $4 trillion in accumulated foreign direct investment. Then, Zhou Mi, how does this compare with levels seen in other countries and with China's past performance?
Well, I think that, in the past, when we started from the 1990s, China started to set out some of the laws separately for three forms of the foreign investment. And one of them is, we can have the shared the stocks, and we can have the joint ventures, and maybe we also have some cooperative, investment from other countries. So in the past decades, I think that the development of these numbers are really fluctuating because, at first, when we're talking about the real investment, we are only half the number of the registered the foreign investment. It's not the real term. So after a while, we started to look at the real numbers of the real incoming, the capital flow or capital inflows from the foreign countries to make it as the basis for calculation. So from that time, you can find that there is a sharp drop compared with the previous period. And afterward, I think that the situation has changed a lot. Although I know that if you are looking at the World Investment Report coming from the United Nations, UNCTAD, they have the very official numbers about all the economy's investment. And from their numbers, China is not the number one. I think that I'm not remember very well, but I'm sure that it is one of the top 3 or top 5. So I think that as general terms, at the volumes of the inward FDI, China is still very attractive. But what is more impressing is about the numbers of the companies. So you can find that the companies who are having the investment in China is keeping on its trend of growing for many decades. I think that is really a very interesting story, because when you are talking about the companies, if they are growing in the numbers, it means that more companies will try to come here to invest here in China. So the new incomers will bring more energies, bring some fresh air, some fresh ideas and fresh abilities, to deal with the supply chains and inter chains. So I think that these numbers are really giving us more probable understanding about the attractiveness of China's market. So I think that these numbers are really very general numbers. We have some report about the statistic, report about the inward FDI from the MOPCOM, but these reports are not giving all the details about all the specific, the home countries of these investors. They are just putting, some of these leading home countries or regions like Hong Kong, like the ASEAN countries, like some of the European countries. They are leading the position in investing here in China.
Right. The reason why I ask this question, or its past performances, is that some analysts are saying that, like Zhou Mi just mentioned, the FDI in China is actually declining.
Yeah.
And the reason why China introduced this plan is because it's becoming less attractive to foreign investors. Then, Shujie, do you think it's a fair conclusion?
I don't think so. You just look at the figure. In some year, it may decline. But in the longer term, you have to look at the stock, the cumulative amount of foreign capitals, rather than just annual float. Of course, the annual flow sometimes it could be higher, sometimes it could be lower. But I think in the last few years, the Chinese government deliberately tried to direct foreign investment to the particular sector in larger scale, in the more cutting edge sector product and also services. So the traditional investment in the traditional manufacturing and agriculture and low-level manufacturing and services, those would probably become more, restrictive and also less welcome. But for the high-tech areas, as I just mentioned, some countries, they don't allow their multinational company to come to China to invest in large quantity. And this actually reflects Chinese domestic market itself. The domestic market, as I say, the Chinese government is trying to make it as much open as possible. But it's just external float. Sometimes, foreign companies, they have their own concern, and also they have their restriction by their own, home countries. So this kind of fluctuation is very normal. It's not just in the Chinese patterns, but in other countries as well, including the EU, the US, and also Japan. But on the longer term, I think it's steady growth because the stock is increasing. And also the number of foreign companies is very significant, 500,000 or more. And the size of these firms are actually much bigger than before. So on the main, I think it's still very steady increasing, in my view, all the time, rather than declining.
Then do you think China's traditional advantages are changing? And what do you think multinational companies value most about China today, Shujie?
Well, number one is the market. China have probably the largest market in the world.
Right.
There's no doubt. And the diversity of the sector that China is attracting foreign firms. And secondly, the Chinese government policy have been fairly, stable. The political system and also the policy system is more stable and improving, become more friendly to foreign investor over time. And these are the most important things.
This has been the Chat Lounge. Then what's China offering this time? We'll have a close look right after the break. Don't go away.
The best military commander is not he who fights 100 battles and wins every one of them. The best military strategy does not lead to the desiccation of the enemy's capital city. Decoding the Art of War will help you understand why there's no art in war and how Sun Tzu stayed undefeatable using the science of war, with fun stories and insightful breakdown of famous battles. Find Decoding the Art of War wherever you listen.
Welcome back to the Chat Lounge. We continue our chat on China's new measures to stabilize and upgrade foreign investment. Let's take a look at what China is offering this time. I believe both of you have already mentioned some, but let's take a look one by one. On expanding market access, the plan focuses on opening up services, finance, healthcare, and pharmaceuticals. But which one is the most eye-catching to you, and which is most likely to deliver results, Zhou Mi?
Yeah, I think that, as Shujie has just mentioned, when we're talking about the reasons why China is so attractive, because that we are really giving more reasons why the companies can come here. So as you just mentioned that, the pharmaceutical, services, these sectors, why they are so attractive, I think that the reason is that they are increasing new rooms or new opportunities for the possible different kind of scenarios. So I think that for many of the investors, when they are trying to do some investment, it's not just when they are going to expand what they have been doing to other regions or other countries. They really want to find some new momentums. So the services, the pharmaceuticals, and other areas in China are so flourishing. The companies, when they are investing here in China, these are really able to have a better abilities to trying to get a higher, returns on this investment. And as you just, said that in my understanding, the artificial intelligence would be one of the most important reasons why they come here to invest in China, because China is such a large market. This market is not just giving the support for China's domestic enterprises and consumers. We're also trying to create more and more market abilities or market possibilities for foreign investors. So in this regard, I would say that artificial intelligence are helping these companies to have a better returns when they are investing here. But also, I would also mention that when they are having the abilities or having the skills and the supporting of the data, dealing abilities, they can even improve their efficiencies when they are operating in their home country and in other countries. So I think that's the reasons why I said that it's not just about China who are shrinking about the number, because the world is shrinking, but we are giving more hopes for those enterprises. Then they are coming here because the quality of investment is special. It's not just trying to reduce their cost of operation. They are giving them more innovative ways of dealing with these kind of uncertainties.
Then what kind of practical opportunities could emerge from further opening in like vocational education or healthcare or AI you just mentioned or digital economy? I understand that in Beijing, Deloitte became the first foreign company to set up a wholly foreign-funded enterprise business skills training to engage in providing vocational training in 2023. Is that something new or full of potential there, Zhou Mi?
Well, I would say that vocational education is kind of a very large market. Well, in China, we have some the parallel education systems. One is for colleges, for the universities, and for those kind of high education systems. Another one is vocational educations. We are training the chefs, the drivers, the operators of those machineries, engineering machineries. So I think that for development possibilities, they are so important. I have attended several conferences when the vocational education colleges in China are trying to support the demand from the African countries, from other countries. I think that these kind of possibilities are really large. But Deloitte, I mean, for that company is mainly on the consulting. That is kind of a very, I would say, it is kind of one of the professional services sectors, and that is also one of our priorities for improving the enterprise's abilities to understand the world instead of just have a better skills or have a better skills. They need to know what management is, and the management is so important in the digital economy. So I think that for this new market access, maybe it is one new example for the possible market entry, but the vocational education are already there for so many years. We are going to put more new elements in that regard, and I think that is a kind of very important thing we want to improve, not just for us, but also for so many friends like the Global South.
Sure. Shujie, what kind of opportunities do you see?
I think the biopharmaceutical investment could be a very long-term and attractive for foreign companies.
Right.
Although the Chinese pharmaceutical company have been developing very fast, but I think there are still shortage of high-quality medicine and also medical services because China has such a large population and also the population is aging and people's quality of life is improving, life expectancy is improving. So the demand for high-quality pharmaceutical product and also medical services will be increasing. In the past, this area would probably was restricted to foreign companies and enterprises. And nowadays, the government is willing to open this area. This means that planner in China already noticed there's an issue here. There would be a very strong complementarity for the experience in large multinational, pharmaceutical and medical company to come to China. Another area is financial services. Although the Chinese domestic market already have lots of banking institutions, including insurance companies, there are lots of market niches that could be provided by very specialized foreign financial institutions, especially foreign financial institutions which provide services for company going in and going out of China. I mean, cross-border financial services. Another area Zhou Mi just mentioned is the high-tech artificial intelligence, digital economy, specialized software and computer components. China have a very large basic infrastructure, but there are some very specialized area where other countries such as Western Europe, Japan, South Korea, and United States, they may have the kinds of specialized skills and also area product that China need. So this kinds of area, there's lots of scope for investment by foreign companies.
Like you mentioned, financial opening is a major component of the package. Foreign institutions will gain access to more risk management tools, including government bond futures. Zhou Mi, why is this significant? And I'm not sure if this financial tool is available to foreign investors before. If not, why were some of these tools previously unavailable to those foreign investors?
Well, to be honest, I'm not quite sure about whether they can have this treatment before. But in my understanding, that the reasons why the enterprises are not able to get the loans from the financial institutions is that whether they have the real things for the companies, for the banks or financial institutions to believe that they can pay back the loans. So actually, normally when they are trying to get the loan from the banks, they have to have the collaterals, like they have to get the ownership of their houses, the cars to the banks before they can get the money. And when they pay the money back, the banks can give the ownership back to them. But some of the foreign investors, they do not have the assets before the investment in China. So from the logistic coverage or management reasons, their assets cannot be owned by the Chinese banks and the financial institutions. So I think that is maybe one reason. And another reason, because some of these enterprises are able to get the loans from the banks by their credibilities. So they can have their credibilities to use as a collaterals to get the loans from the banks. But even before, they are not able to recognize what they have gained as credibilities in the foreign countries. So I think that maybe after these new policies or regulations, there will be some kind of alignment between the China's domestic banks and the foreign banks about the credibilities of those investors, and they will have more knowledge about what they are able, what they will able to pay back the money. So actually, these are the two possibilities. And in my understanding, there are still a lot of new things because China is not so leading country in the financial services or financial development. So we are still trying to have a better and openers for the market access for the financial market. So we are trying to give more room for those kind of innovations in the financial areas. So I mean, in the future, we are going to catch up with the foreign markets, like the developed markets, about the new financial service products. And in this regard, I would say that they will be able to deal with this kind of mutual recognition in a better way.
And then how much of a difference would this arrangement make in attracting global financial institutions? Shujie, what do you think?
Yeah, I give you an example, and it could be more clearer.
Right.
I mean, Chinese multinational company going abroad, and lots of investment, they go through the Chinese banking system, which are established in different countries. Likewise, I think foreign company coming into China, they cannot entirely depend on the Chinese domestic market to provide the services. So foreign financial institutions would have the local knowledge of their own multinational company, and also the legal system, the languages barrier, and so on and so forth. So they have some speciality and also knowledge to provide financial services for those countries. And you're also talking about the Chinese government bond. I think Chinese government bond is probably a relatively more recent phenomenon because the Chinese economy is expanding, the Chinese economy base is getting bigger and stronger. So there is a market need for Chinese bond, and foreign company or foreign individual to buy the Chinese bonds. It's very difficult to be managed by the domestic financial institution. I don't mean it's impossible. It's more difficult, more costly, and the foreign financial institution, they can provide these kinds of services to cut the cost, to serve the local need for the people who wish to invest in the Chinese government bond, and the cost will be cut, the services will be improved compared to just depending entirely on the Chinese financial institution. And many foreign companies, they don't just invest in China, but they have lots of money transition and also credit and so on and so forth. So by allowing the foreign financial institution to establish their service in China will provide more flexibility and scope for them to get financial facilitation. And probably this is the purpose. It is not only a byproduct, but also it is a necessity for facilitating this, cross-border investment.
Fair enough. And with respect to facilitating investment procedures, the plan seeks to do so through measures covering merger and acquisition, cross-border data flows, and reinvestment. So, Zhou Mi, what changes could foreign businesses see on M&A approvals and cross-border data transfers? And I think these issues have been discussed for years. Why has implementation proven so difficult?
Well, I think the reason why it's difficult because they are new areas. So in the world, we don't have our common rules on managing the cross-border data flows. All the countries and regions have different opinions, like the United States. They stick to the principle of no taxes for the cross-border data flows. And it was in the Biden administration and in the Donald Trump administration, they have changed the attitudes a little bit. And for the EU, they are paying more attention on the privacies of the data owners And for China, we are paying more attention on the cross-border data flows facilitations practices. So in this regard, there's no practical ways of managing the data cross-border data flow. And the second reason is that there are so many new things about the technology, about some of this theft from some of the government. They are trying to collect the information in different ways. I think that is really our threat to increase the possibilities of the national security. So we are trying to give these new opportunities for the foreign investors because we understand that they are having some of these their habits in other countries. So then when they're investing in China, they expect to have the similar treatment like what they have been doing in other countries. So we are trying to give some of these areas for the better openness in Hainan and also in some of the cities in Guangdong. So in this regard, I would say that we are going to give them more practices like the market access in a better way, but this should be based on some of these examples that when the foreign investors they are coming here, it is also important ideas or information which can give us some of the hints about the possible ways of moving forward.
Then, Shujie, do you think the latest measures may help alleviate long-standing concerns among multinational firms? Is it enough?
Yes, I think the purpose, just like the data flow in particular, have two potential risks. One is national security, one is privacy. So what the Chinese government is proposing here is probably underneath this concept of uncertainty. The data have to be sorted according to the level of risk. And the lower level of risk, which could be manageable, then they will be allowed to be more open for multinational company. But if some data, they turn out to be highly risky because they really can leak out and threat the national security and also highly damaging individual privacy, those data could be in a later stage of how to do it. And now as the technology is improving, the protection of data leakage is getting tighter and tighter and under better control, then over time, especially after the past the 2 or 3 decades, China probably have accumulated some sorts of technology, particularly the blockchain technology, which allow this data to be protected while at the same time, the less risky data could be used to be shared and can be flowed between different countries. So this kind of policy approach, although it's just a few sentences, it actually tells us the government is already prepared for this kind of exchange, which would meet the two purposes. One is to protect privacy and also security. The other is to make it useful for commercial purposes, such as investment and trade. And the technology and also regulation have to follow up, intertwine with this concept of openness. And this is the concept of information that is showing to the rest of the world.
And one particularly detailed measure offers financing support and streamlined international settlement services for key foreign invested enterprises. Then, Zhou Mi, who would qualify for this? And could limiting certain benefits to selected firms, the so-called key foreign invested enterprises, create concerns among smaller investors?
Well, I think that it's definitely not just having only one standard for those key players. I think that in my understanding, the principles would be this company has a lot of relations or stance or benefits coming from China. So they are really working hard to grow with China's counterparts and not just coming here to set up some windows or some kind of the basis for one part of these supply chains. So they have put quite a lot of important part of their own businesses in China, and they have been working very hard with the Chinese supply chains. That would be, in my understanding, one of the example of these rules. And the second, I think that it's naturally for us to be sure that these companies are able to deal with our concerns. Recently we have so many new regulations or policies published by the administrations, and many of them having some relations with the national securities or some of the concerns of the stabilities of the supply chains. So if these companies are able to address our concerns and they have qualified or give us enough proof to show that their abilities in the development of these businesses to abide by our requirement, I think this company would be also considered as one possible rule. And the third rule is that this company can be very important for the Chinese supply chains. I mean, they are having many relations with the Chinese small and medium-sized enterprises, and also are very important for China's stabilities in that vertical regions. So from these three rules, I would say that this company could be qualified to enjoy a better and more preferable treatment when they are doing businesses in China.
So it doesn't have to be like large-scale firms, right?
I don't think that would be the very important indicator for them to choose the companies from.
Then can you maybe give us some specific example?
Well, we know that Microsoft is one important company that is big, that
Right.
have a very important position in the operating system to meeting the requirement of the software. But they're not so good, trying to give us some of the backdoors sometimes. So we are worrying about that. And for other companies like Linux, some of these companies, they are open source. So they are able to provide more, opportunities for the open source ecosystem. So I think that based on these two differences, I would say that maybe Linux is more trustable for us to enjoy a better treatment of the market access and investment.
You're listening to the Chat Lounge. Up next, find out whether the new strategy may work. Stay with us.
Hey there, global listeners. Get ready for the hottest discussions on the airwaves. Roundtable, your passport to the heart of China's buzzing society. Pressing issues, lifestyle trends, and impactful policies, we're tackling them head on with wit, wisdom, and a whole lot of fun. Discover the real China through the eyes and voices of its people. Gain a unique global perspective on topics that resonate universally. Tune in and turn up the excitement dial on Roundtable as we bridge gaps and break barriers one discussion at a time. Don't just listen, be transformed.
Welcome back to the Chat Lounge. We continue our chat on China's new foreign investment playbook. China wants more foreign companies to establish regional headquarters and R&D centers, not just the factories. Then, Shujie, why is that important, and what factors determine whether a multinational choose China as a regional management or innovation hub?
Yeah, you have two questions here. I answered the first one, why China encouraged foreign companies to have the HQ, also the research center in China. Obviously, Chinese local and central government are looking ahead for the longer term. In the longer term, foreign companies, they have a headquarters operating in China. Then the scale would be more significant, larger, and also the more stability for attracting individual company and subsidiary to come to China. So looking for the long-term scale and also stability. Research and development is certainly very important. As we discussed earlier, the Chinese industry is transforming from the relatively low level to a high level. And this kind of transformation requires a lot of technological innovation. Certainly, technological innovation cannot entirely depending on domestic research institutions and also domestic firms. If foreign firms and foreign research institutions can establish their research and innovation center in China, then they will facilitate and accelerate the Chinese research capability. And your second question, why foreign firms have the motivation to establish the HQ and also R&D? I think it purely depends on the long-term perspective and how China is attractive for the long-term business development and also research innovation. We already have some such example, Apple and Microsoft and other multinational company, including Tesla. They already have some sort of research capacity in China, which is quite useful, facilitating the technology in their local operation and also subsidiary. But in the future, I think China will probably encourage more. And to have a stronger stronghold in China would benefit the future, would have the advantage compared to the other company which do not have this kinds of HQ and also R&D center. So it's the long-term consideration for them. First of all, China is very attractive. China's policy allowing them to do so. And also they have a longer perspective of getting more profit in the Chinese market.
And is the talent pool in China another factor that determines whether they will choose China as a regional management or R&D center?
Sure, I didn't mention that, but I saw this question is given by nature. The Chinese is not short of talents,
Right.
because we have tens of millions of people graduating from the university and hundreds of thousands of doctor training, PhD training in higher education. So they provide ample talent pools for this kinds of purpose.
Can you further elaborate a little bit on what more China can do to attract a higher value investment?
Well, I think the law and regulation and also the consistency of this kinds of policy, and also local government accommodating policy, including tax incentive initially for the headquarters and research development if they fit the Chinese long-term purpose, and also human capital employment, labor policy, and other things, and services, including the financial services we just mentioned. There are a stream of policy that could be attractive to attract those company and R&D. And also intellectual property right protection, because foreign investment firm, especially the high-tech firms, their research and development technological innovation, they are afraid of leaking their technology which are not fully protected. So if the Chinese are proactively to protect their intellectual property right and also set up a mechanism of penalty for those company violating this kinds of intellectual property right law, then foreign firms will become more assured without worrying too much risk.
Fair enough. And the plan also encourages qualified foreign invested enterprises to list on Chinese stock exchanges. Zhou Mi, what type of foreign companies do you think are most likely to take advantage of this opportunity first?
Well, I think that many of these foreign companies want to be listed in China for sure, because China have a huge number of investment or capital. They want to choose some very important companies to invest. They are not just trying to invest in the companies from China, but also from other countries. So this would be very potential for them to try to compete for. But in my understanding is that when we're trying to choose for the pioneer, the examples, they should not be so large, like the giant, like the SpaceX or the companies from the Saudi Arab. I think these companies are too large to be listed. So
Right.
in my understanding, maybe the first batch of the possible companies should be smaller size. And many of them should be in the technology areas or the high-tech areas. And some of them may be important for China to make some placement of our supply chains in some areas. So two possible directions. One is the higher technology, and the second is some of the critical complementary companies for China's supply chains.
Another issue foreign invested enterprises has long been concerned about is national treatment. Then, Zhou Mi, where do you think the biggest bottlenecks remain?
Well, I think for that kind of concerns, I don't think that there are so many barriers. In China, we have the negative list for the foreign investment. So the negative list is coming from the practice in Shanghai. And I would say that would be the practices we continue to shorten the negative list from the year of 2013. So till now, there are only about 34 in my memory items which are in the negative list. That means these sectors, when the foreign investors want to invest in China, they are not enjoying the national treatment like the local companies. But these sectors are not so important for many of the foreign investors. Like some of them are to do with the Chinese herbals, the ways we are dealing with the herbals. Some of them are to do with the media. I think these are very sensitive sectors. We have some concerns of our own, but these sectors are not so profitable. And when the foreign companies want to invest, they are not just trying to complain with that. So I have talked with many of these foreign investors, and I didn't hear too much from this national treatment complaints, in this regard.
All right, then Shujie, do you agree there, or have a different opinion?
I think initially, actually, foreign companies, when China just opened up, they enjoy privilege of paying low tax. And later on, this concept of discrepancy was reduced. Nowadays, we are talking about foreign company could be potentially discriminated, partly because of the negative list and partly because of the uncertainty of going through the bureaucratic system of establishment and also paying tax and also employment, the pension scheme and medical care, other things for the employees. So I think, the government is trying to not only reduce or shorten the so-called negative list, but also have more open policy for the labor markets, especially for foreign investment firm employees to enjoy the concept of social benefit, pension and medical care and education of their children and so on and so forth. And this would also give some sort of equal playing field for investing firms to try to identify the potential gap for employee and also company between foreign investing firm and domestic firms, and try to see how the local and regional government can remove the gap through the law and regulations.
And China's pitch to foreign investors appears to be evolving from low costs to market opportunities and innovation capacity and industrial ecosystem advantages, like you mentioned. But what are the biggest challenges in making that transition? And what's your estimation over whether the strategy may work? To both of you, maybe Zhou Mi first.
You're talking about the challenges?
Right, the challenges and the outlook of the new strategy. Will it work?
Well, I think that first of all, I would say that some of the interference from another country, like from the United States, would be one of the most important barriers for some companies who want to invest in China.
You mean geopolitical factors?
Yeah, not geopolitical, just from their own consideration. Maybe they are having some relation with the geopolitical, but I would say that they want to compete with China and they are having more barriers, the regulations to stop companies to investing in China.
All right.
So that would be the first challenging. And the second, I think that we still need more communications among the different stakeholders. If we are not able to communicate with them, we may have some misunderstanding about the possible ways of doing business together. And the third one would be, some of the uncertainty about the development of technology itself. So there are so many new technology, we still do not know what is the direction, would be the right direction. So we're still trying to explore the most feasible ways for the development, and that needs some time for the more discussion and practices.
Shujie, your take?
Yes, I think it's the concept of bilateral and multilateral international diplomacy, which have the biggest hurdle for this concept transformation. Because the world economy is getting more sophisticated, and the cutting edge competition for innovation and technology in particular, because the modern industry is empowered by the current technology and also the future technology. So cross-border investment and also cross-border innovation have to face this kind of uncertainty, not only to meet the domestic or the one country government policy requirement, but also aiming for the future of how to create a mutual benefit outcome for the host country and for the investors. So this kinds of issue have to be dealt with case by case and also sector by sector, firm by firm. It's getting tougher and tougher. In the past, I mean, the foreign firms, they are very easy because they have the technology which far more superior than the domestic, companies. So they enjoy this kinds of abnormal profit. And nowadays, because the domestic enterprises, they become very competitive. And to some extent, they are even more competitive for some foreign firms. So this presents a much bigger and bigger challenges for the foreign investors. So my view is that to overcome this difficulty, number one, China should open the door, and also the regulation policy will become transparent and also stable to give the confidence for foreign investors. But on the other hand, foreign investors, they have to be realistic, whether they have the cutting edge technology, which China may not have. Or if China already have, if they come to China, they are likely to face very tough competition. They end up not making too much profit in the end. So to make profit in China, you really have to have a number of advantages that China may not have the same level. For example, your technology would be more superior, your management experience is more richer, and also your organization, including marketing and international marketing network, is more superior to the domestic companies. So they have to look at all these issues as a comprehensive package rather than one particular issue, or whether the government have one privilege policy for a foreign company.
Then, of those 15 measures, which one do you think will deliver the most immediate and tangible benefits this time, Zhou Mi?
Well, I think that normally we will say that those clauses or terms who are put in the first will be in the priorities for the logic. So actually, for the first part of this measurement, I think that we have put several kind of market access for the opening up. These access are mainly, covering what we have been doing for many years about the medical cares, about the financial services, and also about some of these concerns from other foreign investors. So the market access are really important for those companies who want to come here to China to establish a better position. I want to explain it a little bit more because we have promised in WTO, in the GATS, in the General Agreement of Trading Services, about opening up in several service sectors. So what we are now doing is beyond that. We have already fulfilled our commitments for open our market, but now we are trying to do more. So it's not just what we have been doing is trying to reduce our barriers. I think that is maybe our more exploration about the possible areas. So for the market access, it is very important and much easier for investors to feel the different requirements, and then they actually can put it in that directions. Why I want to put that in the first priority, because those areas are what we are really need from the participation from other countries. So that is the joint interest by both sides, from China side and from the foreign investor side. I think these are maybe will be effective in the priorities or in the first.
I think it's very difficult to say which one is better than the others. They have to look at the kinds of policy packages, because lots of policy points, they are interlinked. And if we have just one point, then you ignore the other point. But I want to emphasize some particular point. For example, by allowing the new area for investment is already a very important policy step forward. And also specifically for the sector, for example, like the pharmaceutical company, encouraging them to come, and also the concept setting up the fully owned company in China and to be listed in the Chinese stock market. Those policies, I think, are relatively new, and they could be very revolutionary for the foreign enterprises. But it may take time, and also some testimony for those companies to become successful. Because for any new policy, including, for example, like listing on the Chinese stock exchange, there are many obstacles that need to be overcome and uncertainty that have to be fully understood. And also, headquarters and also R&D center, they are also compounded with other policies such as the intellectual property right and also the long-term policy for this headquarters, that both sides, China and the investors, countries, they have to have this political will. They shouldn't change policy because of one political event or particular government administration. They change everything after the midway of doing business. You have to have this long-term consistency of guarantee of policy stability.
And on that note, we wrap up our chat for this session. Many thanks to Dr. Yao Shujie from Chongqing University, Dr. Zhou Mi from the Chinese Academy of International Trade and Economic Cooperation. We'd love to hear your thoughts, so drop us a line at radio@cgtn.com. I'm Tuyun. Thank you for listening. Join us again for more Chat at the Chat Lounge next week. Till then, take care.